Have you ever wondered what lenders see when they evaluate your creditworthiness? The answer lies in your credit report. Understanding your credit report is essential to managing your finances, getting approved for loans, and securing favorable interest rates. In today's video, we'll take a deep dive into what a credit report is, how it works, and why it's so crucial to your financial future. Stick with us until the end, because by the time we're done, you'll know exactly how to take control of your credit and protect your financial health. What is a credit report? A credit report is a detailed summary of your credit history, compiled by credit bureaus. It contains information about your borrowing and repayment habits, including credit cards, loans, and payment histories. Essentially, it's a snapshot of your financial behavior, and lenders use it to determine how likely you are to repay borrowed money. What information is in a credit report? Personal information. Your credit report includes basic details like your name, social security number, current and previous addresses, and date of birth. This helps creditors verify your identity. Credit accounts, also known as trade lines, this section lists all the accounts you have opened, such as credit cards, auto loans, mortgages, and personal loans. It details your account balances, payment history, and whether you've ever missed or made late payments. Credit inquiries. This section shows who has accessed your credit report. There are two types of inquiries: soft inquiries, which don't affect your credit score, and hard inquiries, which may lower your score slightly and are made when you apply for new credit. Public records. If you've been involved in certain legal proceedings such as bankruptcy or have unpaid tax liens, these may appear on your credit report and negatively affect your credit score. Collection accounts. If any of your debts have been sent to a collection agency, this will appear on your credit report. Collections can damage your credit and remain on your report for several years. Why is your credit report important? Your credit report plays a crucial role in your financial life. Lenders, landlords, employers, and insurance companies may all use your credit report to assess your reliability and trustworthiness. Here's why it's so important. Credit approval. When you apply for a loan or a credit card, lenders use your credit report to decide whether to approve your application. A strong credit report increases your chances of approval. Interest rates. The better your credit report, the lower the interest rates you're likely to receive on loans and credit cards, saving you money over time. Employment opportunities. Some employers may review your credit report as part of the hiring process to assess how responsibly you manage your finances. Renting a home. Landlords often check credit reports to determine whether you're likely to pay rent on time. How to access your credit report. You are entitled to a free credit report from each of the three major credit bureaus: Equifax, Experian, and TransUnion, once a year through annualcreditreport.com. Reviewing your credit report regularly helps you monitor for errors, track your credit behavior, and spot signs of identity theft early. How to improve your credit report. Pay bills on time. Consistently paying your bills by their due date is one of the most important factors in maintaining a positive credit report. Keep balances low. Try to keep your credit card balances below 30% of your available credit limit. This shows lenders that you can manage credit responsibly. Avoid opening too many accounts. Each hard inquiry lowers your credit score slightly. Limit applications for new credit unless absolutely necessary. Dispute errors. If you spot any inaccuracies on your credit report, such as accounts you didn't open or payments marked late that were actually paid on time, dispute them with the credit bureau immediately. Common mistakes to avoid. Ignoring your credit report. Many people don't review their credit reports until they're applying for a loan. It's important to check your report regularly to ensure accuracy and spot potential problems early. Maxing out credit cards. High credit utilization can lower your credit score. Keep your balances as low as possible to maintain a healthy credit report. Your credit report is one of the most important financial documents you have. By understanding what's in it and how it impacts your financial life, you can take steps to improve it and open the door to better opportunities. If you found this video helpful, be sure to like, subscribe, and hit the notification bell so you never miss our latest personal finance insights. Thanks for watching, and here's to mastering your credit.